Okay, look, take a look at this daily chart of the Dow Jones Industrial Average. DeMark and his team take a proactive approach to timing the market rather than a reactive one, which doesn't do us any good at all. In late August, you can see he warned us that the market could soon peak, and we did have a short-term peak followed by a big breakdown. But it didn't stick. Why not? Here's the thing. Many years ago, DeMark came up with a series of timing models that have proven to be ridiculously reliable. He's always looking for moments, true just moments, snapshots, where a trend is about to exhaust itself. You get more detail on his method at something called symbolic.com. I'm going to spell that for you. SYMBOLIK.com, his cloud-based analytics platform. These models allow DeMark and his team to spot key price levels and key moments where a stock or an index or even a cryptocurrency is likely to change its trajectory. When the Dow peaked on September 2nd, and you can see where we are, it coincided perfectly with DeMark's timing model, but not his price model. He figured we run all the way to 29,400 or even 29,500 before we peaked. In other words, even though he pretty much called it a sell-off, his methodology suggested there was something off about the decline. When the Dow bottomed on September 24th, DeMark's short-term timing indicator turned positive, which convinced him that his old upside targets were back in play. He sees the Dow running to anywhere from 24,409 to 29,551 before it runs out of steam, up about 2.5% to 3% from where it's currently trading. So we want to grab that gain, right? We want to grab it. We don't want to be too greedy. So in terms of timing, the Dow's now 10 sessions into what could be another 13-session sequential pattern. And that's the same pattern that told DeMark the market would roll over in early September. If we get 3 more sessions, right, where the Dow finishes above the close from 2 days before, then the pattern says we're looking at a top. So let's take a look at what could happen here. DeMark has another timing model that puts us 11 sessions into a 13-session countdown, meaning 2 more up days take us to the peak. If the Dow also hits DeMark's price target in that period, well, then things could get ugly. Assuming this pattern holds up, he thinks we've got one last leg higher. Okay, so you don't have to get out today, but you have one last leg higher before this rally runs out of steam. It's possibly at the end of the week. That's not what I want to hear, but it would make sense. We've had a monster run going into earnings season. So let's say this pattern unfolds as predicted. We get one last hurrah through the end of the week. We got about 3 more big weeks of earnings after this. Then the market rolls over. What happens next? Well, then, of course, we have to contend with the election. Assuming the Dow peaks in a few days, and then we get that sharp decline that he's talking about, DeMark says there should be just enough time for his indicators to turn positive and identify a bottom right before the election.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.